Mega up move remains. That's been the story of the day. We have Mayuresh Joshi joining in to make sense of what's been going on the screen. Mayuresh, hi, good afternoon. The screen's telling you one thing. It's that perhaps bulls are confident. Capex, manufacturing, auto, banks. That's what today is all about. Your thoughts?
Afternoon, Surbio. Absolutely. I think with the RBI payout yesterday, I think the entire consensus in terms of infrastructure spending is back with a bang. And with the expectations of a stable government expected to continue for the next 5 years and the reform processes thereof, I think the accelerated investments surrounding infrastructure, including capital goods, including a whole proxy in terms of housing, cement companies to a large extent as well to support that thesis as well. I think that entire move is getting well supported in terms of domestic cyclicals, expected to continue doing well. So yeah, I think earnings have been stable so far. Macros are looking good with the GST number that we've just witnessed, the RBI payout. And globally also, I think things seem to be coming back on track. So I think liquidity along with all macro and micro factors firing up the indexes on all cylinders.
All right, Mayuresh, I wanted your view on a couple of names, which have actually done well, but they come in for profit taking today. IMFA, that's Indian Metals. Now that stock is down close to around 3.5%. The first look at the numbers tells you that, they're quite disappointing on the margin front. But a closer look tells you there's a big spike up in the other expenditure. So there could be a one-off that's being factored in out there, just looking at those numbers. And we know that ferrochrome prices are very, very strong. That's virtually at the low point of the day. So that's one stock. And the other one is HEG. The stock is down 15%. Numbers are disappointing, and they've announced this demerger, which the street is still coming to terms with. Why did they announce it? Both these two have, good tailwinds, but for the time being, they're under pressure. They're ancillary, so to call it, of the steel space. Your view on either of them?
Afternoon, Nigel. Now, again, I think numbers in the case of HEG were definitely disappointing. They were very, very soft. But in the case, in a structural case going forward, I think at some point of time, as demand starts coming back, and the green steel concept that is now getting discussed within a large part of the European markets, I think that is going to be a game changer in the next few quarters. So I think a lot of companies need to revive their processes in terms of how steel is probably made. HEG probably in the right direction as far as that structural step is concerned. Obviously, what happens in terms of needle coke prices, how do they evolve over a longer period of time, will also have a say in terms of the overall operating performance. But I think the structural side of the story remains with these graphite electrode players. So I think there is a structural element as a tailwind to both HEG as well as Graphite India. As far as IMFA is concerned, ferrochrome prices are very, very stable, expected to improve going forward as well. Yes, I think the numbers in terms of one-offs did play off in terms of margins. But is there an expectation in terms of some element of recovery that can come through in the next few quarters? I think I've seen the management, you interact with the management a lot of times, Nigel, and the enthusiasm emits from the fact that at some stage, the stability will come back. Obviously, it's a commoditized play, but I think the end applications, realizations expected to remain strong will remain a tailwind for this case as well. So I think, both the cases have structural tailwinds behind them.
Just quickly, Mayuresh, trying to squeeze in two questions at one go. We didn't have too much time to talk stocks, but in case you have a view on Nykaa, please tell us. Market was not too excited with the numbers after Q4. And also shipbuilders. I mean, it's absolutely phenomenal. The rally in shipbuilder stocks today. Garden Reach is now ending almost on circuit.
So Nykaa again should be soft numbers, so I think we'll let that pass for the paucity of time. But yeah, I think the shipbuilders are acting like rockets. So you look at the share prices that all these shipbuilder stocks have probably delivered over the last few quarters, and they are delivering on numbers. So I think the only two angles that need to be looked out for is how will they execute? Is there an execution risk for any or all of these stocks going forward? What if they miss a couple of quarters in terms of not executing that well and therefore having a patchy annualized number as well? And the second risk obviously emits from the fact in terms of the receivable position as well. But I think the second risk probably seems to be a low probability in terms of how the government balance sheet is stacking up, how payments are probably happening, how the working capital days are playing out. So I think the only risk that happens for these stocks will be is execution. Fingers crossed, I think if they're executing well, I think the momentum can very well continue.
Okay, all right, Mayuresh, short but effective chat. Thanks a lot for joining in and giving us your quick analysis on a whole host of those names.